everyone. Happy November. Welcome back to another economic and market outlook in 10 minutes or less. I'm going to give you the update for this month. So we're going to go ahead and start with what we've been starting with each month, which is our construction put in place numbers. So these are the design and construction numbers that the Census Bureau tracks on behalf of our industry. And really what we're seeing is the continued trend of residential sort of carrying the weight of all of the other market sectors. So as you can see, when we compare September of this year to September of last year, and these numbers just came out on November 1st, we're still up over 19% residential. And remember, 2020 was not a lag year for residential. 2020 was over 2019 for residential. So this is really, really impressive. The other takeaway in this month over month spending is that private non-residential is starting to flatten out. So we're not seeing any more major declines. So that's exciting. And we're seeing sort of a slight decline year over year in public. Now on this slide, what we're looking at is all of this year so far, January through September, compared to the same period last year, January through September. So this really just augments what we're seeing in that month over month trend. So again, residential up over almost 25%, great for our land development folks, great for our folks that do community infrastructure. Private non-residential down about 6% and public down about 5.5%. Now, for those of you who have followed along on my first two videos, you know that I've been keeping an eye on this public design and construction number because we've seen a trend. Our private non-residential has kind of dipped during the beginning of the pandemic, but has sort of flattened out and is now coming back. Our public lagged behind. And the reason for this is that, as most of you know, states and localities can't carry deficits. And so in 2020, when they saw that lack of tax revenue come in during the shutdowns and the real, pandemic months, they sort of stopped spending. And so we have a little bit of a lag. Now, what we're now seeing, which is kind of exciting, and we'll have to wait another couple more months to see if it's a trend, is, if you look from the bottom up, the up is the most recent months year over year comparison, you see that we dipped really low in June and May of this year, and now we're starting to come back up to not such a decrease in the year over year comparison. So really what this is attributed to is that the CARES Act and the other stimulus efforts that we saw in the spring has made its way to state and local governments. Their coffers are full. People are spending again. Consumer spending is back where it was. And so hopefully we're going to see some corrective action and we'll see public grow hopefully soon. So this chart, just to give everybody a quick snapshot once again of, when you talk about total design and construction spending, what really makes up the pie and what's the movement? Public is the line on the bottom, very flat, not the largest sector of design and construction spending. Private is above it, and that includes residential, that number, and then the total. So really the trend line, the driver in most of our design and construction spending is really about private spending. So the other information I wanted to share with you all this month is the most recent National Association for Business Economics Business Condition Survey. So NABE is a great group. They do quarterly surveys, and I often share the results with you all. Now, in this most recent survey, which came out last week, I sort of took in all the information using the lens of having been at our fall conference, our first big in-person meeting last week that we've had in 2 years, and what sort of correlations I saw with what the Business Condition Survey is saying from what I heard our members saying. So first of all, we're continuing to have very strong economic growth. The respondents sort of revised it down a little bit, but still very positive growth overall. However, wage increases are becoming really significant. So wages rose in Q3 of this year 58% compared to 51%. And this is the fifth consecutive increase during this survey. So that's pretty significant. Now for us, we know that we have a shortage of skilled workers in our industry. And so we also have rising wages, which is showing no sign of easing. Another really interesting point that I thought was that the biggest upside risk to the company's outlook is that the COVID-19 and the fears of COVID-19 have sort of quieted down. So that's very exciting because that used to be really our biggest downside, our biggest negative. And now it's our biggest upside, is that people are feeling much more comfortable. The variant spread seems to be declining. And so since most of our economy is about consumer spending, this is really good news. Now, the biggest downside risk, now remember, in all the other surveys up until this point was about the pandemic and the virus still. But now the biggest downside risk is increasing cost pressures. And what I find most interesting about this is that for us and for our industry, the cost pressure for as a professional services is tied to labor costs. Now, of course, our home builder clients and a lot of our developer clients, they have cost pressures that are related to materials, and that certainly affects us as well. But that increase and that raising price of rates is really, really interesting. And one of the things I've heard from our members, both at the fall conference and just queries recently, is now the time for us to really examine raising prices? And when we have labor costs increasing, especially if we have multi-year contracts with some of our clients, how can we go back and make sure potentially that we can still make a profit? So this is really an interesting time, and an interesting time that I think many of you are probably asking the same questions. And finally, I definitely wanted to share this because it's such a hot topic, is that the hybrid work environment, even though the pandemic is sort of easing up, seems to be even getting stronger. So almost 2/3, 65% of the respondents of the survey indicated that their firms are going to implement hybrid work even after the pandemic subsides. This is up from just a few months ago. Now, the reason for this is, and what I heard from many of our members, is because they want to stay competitive. They want to be able to attract that labor. All of these factors are sort of tied together in such an interesting way. Now, moving on from the survey, I'm going to do a little plug now. So as many of you know, we produce a series of ACEC private industry briefs, and we've concentrated on 4 markets for the last couple of years, but we just added a 5th market, and we premiered our brief last week at the conference. It's also available now to download on acec.org under Business Resources, Private Markets. And we've decided to have our 5th market be education because, plain and simple, it is the 2nd largest market after transportation at 13% of total design and construction spending last year. Now, most education is not private, but in the spirit of us also championing the vertical market, we definitely felt that we needed to do a deep dive in this. So please download the brief, take a look at it. We try to cover a lot from K through 12 all the way through universities and even a little bit healthcare systems and P3s. But we'd love your feedback on that. And so, as I said, you can download the brief on our new reorganized webpage on acec.org. We have a link right there. You'll see these monthly economic presentations, information about our symposiums. We're going on a national tour. We're coming to Charleston the first Friday in December, so hopefully you can meet us there. And then we'll be going to Scottsdale, Arizona in early March. And we also have copies of our columns that we're writing in Engineering Inc. magazine, as well as our podcasts. With that, if you have any questions, comments, anything you want us to take a look at and analyze, don't hesitate to drop an email or give me a call. Thank you.